How is everyone today? Keith at Crypto Bullseye. So, at the request of the community, we're going to do an update on Algorand. I'm invested in Algorand. How much do I own? Probably less than 2% of my portfolio, guys, at a push. So, that's what I talk about diversification. But basically, Algorand has dropped 60%. That means that I've dropped 60% on my Algorand position. And anybody else that's in Algorand's dropped 60%. So, what is the psychology behind dropping 60% of a cryptocurrency? It hurts, guys, doesn't it? There we go, 60% to where it is now. So we talk about from a trading perspective, you look after the risk and the reward will look after itself. And I mean that, and I'm going to hone down on that in this video. So in the short term, we're going to look at what needs to happen on Algorand, whether there's more buying pressure, whether there's more selling pressure, what indicators are showing me exactly what needs to happen for this reversal to occur before we start putting in those higher highs and higher lows. More importantly, where will it hit in the bull market when we get Altseason? Right, Algorand, let's do it. What needs to happen in the short term? What needs to happen in the long term? How's price action likely to behave today, tomorrow, going into next week? What can you expect for the bull market? When we eventually get that Altseason, when we eventually get that metric, when you get a break, you get a close of total 3, that's when you get your Altseason, guys. People have been calling it for months. People have been calling Altseason for the last 6 months, 7 months, 8 months. Guys, my metric has always been the same. My metric hasn't been hit. And guess what? We haven't had Altseason. So when we do get Altseason, that's when we need to make sure that we've got preparation in place to ensure that you're ready to capitalize from that. You've got an exit strategy to be taking out and distributing, guys. You accumulated at low levels. You need to be distributing at high levels. Otherwise, what happens? You ride it all the way to the top. We looked at the Illuvium video, all the way back down to the bottom again. Don't be one of them people that hold your bags for 2 years, for 3 years, for 4 years. I love cryptocurrency, guys. There's a lot of people in the algo community. You're going to love cryptocurrency. You're going to love Algorand. You're going to be attached to Algorand and you're going to feel this thing's going to change the world, guys. It will for a short amount of time. But if you don't cash it in, guys, it's going to hit you even harder. So I'm not hating on these cryptocurrencies, guys. I'm using these cryptocurrencies as a tool for me to be able to take out of the market and be able to be successful and give myself additional options in life, guys. That's why I'm doing it. So I'm not attached to Algorand. I'm not attached to anything. Don't get me wrong, guys. Bitcoin, I'll be holding Bitcoin for a long time. Anything outside of Bitcoin, expecting to sell it, guys. Will I buy it back again? Probably. I love cryptocurrency. But why do I want to drop 95% of my value? If I'd have capitalized and distributed at the top and then dropped 95%, guess what all that capital can do from a compound effect for the next rally, guys? That's where millionaires are made. Unfortunately, they're not made in weeks, not made in days. Unfortunately, millionaires, guys, are the people that stand the test of time, have patience, and understand exactly what their exit strategy is, what kind of conviction that they have, and understand the way that the markets work from a macro perspective. Because cryptocurrency is no different to traditional markets, just higher risk, just more of them, it's more speculative. So that's why the gains are bigger, but unfortunately, that's why the losses are bigger. God, that was a bit long-winded for Algorand, guys. Let's jump into the charts. So we've got a 60% drop. What we'll do is we'll stick our Fibonacci retracement on there. We can see if there's any key levels that we need to overcome, any ones that acted as support, what's going to act as resistance, and we'll get an understanding of what needs to happen in the next few days going into next week. So there's our Fib retracement tool. You can see we've come down, hit the 618, we've bounced from the 618, we've come back down, 236. That was the lower high, and then we've come back down. Now, this is the important thing that I want to show you, the 200 daily moving average, because when I say look after the risk and the reward will look after itself, this is exactly what I mean. It's exactly what I mean. We have just taken back the 200 daily moving average. We've just taken back the 200 daily moving average. And guess what? We're just about to retest the 200 daily moving average. Now, what is the significance of the 200 daily moving average? Let me ask you that. When you're above, you're bullish. When you're below, you're bearish. It's as simple as that, guys. When you're above the 200 moving average, then you're bullish. Now, if you're above the moving average and then you come back and you've retested the moving average, what does that allow for? Like, seriously, what does this allow for, guys? We talk about it time and time again. Risk to reward. Where would you be wrong? If the 200 daily moving average is signaling that that's the bear market indicator, where are you wrong? Below the 200 moving average. Do you ever get any kind of a risk to reward like that? 23 to 1 risk to reward. Now, this is an important thing, guys. Do I think that this is going to play out? It could quite easily get stopped out. If it gets stopped out, who cares, guys? That's such a limited amount of capital that you're risking. But what I want to tell you is that trade here, just to the previous all-time high, previous local high, somewhere where it's been in the last few months, when you're above the 200 daily moving average and you've got a risk factor like that where you're saying, I'm wrong if it falls back under, that means you've got such a little amount of wiggle room. Now, this is the important thing. So if you took 23 trades, we've got a 23 to 1 risk to reward here. And I'm not saying take this trade, guys. I'm just saying this is hypothetical. Look after your risk. So if you took 23 trades exactly like this, 23 trades, what would happen if you won once? You would break even. So that means out of 23 trades, you would only need to win one of these, and then that would mean you break even. Guys, if you won 2 out of 23 of these trades, guess what? That is a money printing machine if you did that consistently. Now, can you do that consistently? Will you get moves like this at 23 to 1 very often? Guys, no, you won't, unfortunately. But that's the significance behind it. Look after the risk, the reward will look after itself. Now, how could you play that? How could you play that and make sure that you're banking along the way? If this did act as our stop loss, and we did hold the 200 daily moving average, what's going to happen is you're going to get a break of this trend here, and then you're going to put in a higher low. When you put in the higher low, what you're doing, bringing your stop loss up, in profit. You're in a free trade, you're in profit. What happens? You're expecting to put in higher lows, guys. The trend's reversed. Higher lows, higher lows, higher lows. Protect yourself, protect yourself. When the trend reverses, bam, you're out in a significant amount of profit. And that's just a hypothetical example. So that is the short term. That's how you can play the short term trade. The one good thing is we've held the 200 daily moving average. We've broke back above it and we're coming back and we're retesting it as support. So if that does hold as support, guys, this is going to be a really good one. Right, zoom out now. Where can this thing go in the long term? This thing can go in the long term, guys. I'm going to stick a 236 on there, just a conservative 236, because we're not shooting for the moon. Do I think Algorand's going to put in all-time highs? Probably not. From a macro, we'll have a quick look at a trading pattern that's been playing out for a long period of time, but you've got the 236 here, which is going to act as your next major resistance, and that's going to be sat up here at 76 cents. If we just stick a fib extension from here back to its low, you've got your 1-to-1 up here, you've got your 1272 here. So you've got a bit of a range here, guys. Got a bit of a range. And what you'll tend to see is it's a higher probability of it hitting the 1272 as a wave 3, because wave 3 is usually longer than wave 1. Wave 3 can't be the shortest wave, is what I'm saying. So if it doesn't go past the 1-to-1 equal measured move, that's probably going to be a failure. So that's one thing to look out for. However, that's such a move to the upside from where price action is now, all the way up here, just to the 1272. That's like a 250% move. So that's where it could go in the midterm, guys. Do I think Algorand's going to put in all-time highs during this bull market? No, unfortunately, guys, I don't think it's going to put in all-time highs. However, when we zoom out, we can see this. Similar to XRP, this is similar to XRP, where you'd had a lower high there, and then XRP put in another lower high, and then it broke out with some velocity to test this previous high here. Do I think it's going to happen with Algorand? No, I don't, guys. However, we've got this range. If we did come to the top of this range during the bull market, from where price is now, 897%, nearly 900% to the upside. So watch that space, guys, $2.40. Right, if you did find this video informative, and if you do want me to go over more videos like this, where we're doing a deep dive from the shorter time frame, what needs to happen in the next few days, what needs to happen in the next few weeks, what could happen in the bull run, let me know in the comments, guys, and I'll cover your crypto for you. See you in the next one.